Hi, everybody. Welcome to Ask a Tax Nerd. I am Kristy Pack, an IRS Enrolled Agent and the owner of Pack Tax, Utah's highest rated tax nerds. And I'm really excited. Today we have a great tax question. And the question that we're answering today is from one of our clients, Kaylee. I've actually changed her name. A lot of people have this question, but it's kind of all up in Kaylee's business, so we didn't want to use her name. So we're going to call her Kaylee, but she's a real person, and we actually get this type of question a lot. So Kaylee has questions today about her recent divorce and her ex-husband and the kids and what needs to happen with taxes now that this divorce has happened in this past year. And today I have the lovely Ashley Peterson with us, who is going to help us ask Kaylee's question. And we're glad that she's here, and we are just going to be able to dive right in. Okay, Ashley, you have Kaylee's question. Let's just go for it.
Yes. Okay, Kaylee's question. She says, "Hi, tax nerds. I just got divorced this year, and I'm not quite sure how to file my taxes. Do we still file together since we're still married this year, or how does that work?"
Okay, good question. So, and a common question. So the IRS is going to look at what your marital status is on December 31st of that year. So this means that if you are divorced, if the divorce was filed in July, then the IRS considers you divorced because on December 31st, you are divorced. Even if your divorce is final December 31st, you are now divorced. And so because whatever you are on December 31st is going to kind of dictate what your filing status could be. So if you are divorced during the year, you are no longer allowed to file a joint tax return. I know that sounds super you would just know that, but no, you wouldn't just know that. Just know that there's a lot of weird things. And so always ask the question, but no. So, and we get that a lot. So no, even though you were married the majority of the year, or you were divorced even on December 30th, doesn't matter. What were you on December 31st? If divorce was final by December 31st, then you no longer can file married filing joint. Then it goes back to, well, what is your filing status? You have a couple of options. Mostly your options are going to be, and also not married filing separate, because you're not married. So let's say that the divorce was coming for Kaylee, we're getting divorced in a few months. We've been separated, but we're not divorced yet. Okay, well then options are different because you weren't actually divorced yet on, December 31st. So you have options to file married filing separate or some other things. So again, you're looking at what were you on December 31st. So for Kaylee, you were divorced. Your options are you have to file not married. And so your options are going to be either single or head of household. Now, that's not you get to choose. It's you have to determine which one you actually qualify for, right? So when I say we have options, it's not just oh, which one's the best one? I want that one. Well, we do want the best one, but we want the one that you also actually qualify for. And there's really specific rules about what your filing status needs to be. And there's actually really big penalties if you do it wrong because there's money attached to it, right? So there are certain filing statuses, right? That get you bigger tax benefits. And so of course you'd want to file the one that gets you bigger tax benefits. But if you file that way and you don't actually qualify, you can get in big trouble. There's a lot of fraud that happens that way. Now, I want to put this in there as well. Just because TurboTax lets you put a filing status down, or the gal at H&R Block says, sure, we're going to put you head of household, or even your very well-informed CPA puts it down, it doesn't mean it's right. You need to make sure you're following the rules. And the person helping you or the software helping you, they could type it in wrong and off it gets filed. So I think it's good to kind of be aware that you are following the rules. Even if the software is well, the software let me do it. Okay, that doesn't mean it was right. Yeah. And if in the end it's wrong, it's still you that is going to face the consequences and the penalties or the things that could go wrong, right, if it's wrong. So don't be surprised if the software lets you do stuff. The software doesn't know. So this is a good reason why you want, especially in tricky situations and transition situations, it's a good idea to maybe have somebody competent help you so that you are doing the right thing and not getting in trouble for it. Okay, so the question now is, okay, so you're divorced. Do you file single or do you file head of household? Okay, it's going to depend. First question, are there children involved?
She does. She has 2 children.
Okay, she has 2 kids. And kids, right? They're not adult kids. Okay. So Kayla's got 2 kids. Okay. So then the question is, where are the kids living?
So it's 50-50.
Okay.
But really, she says most overnights are with her than with dad.
Okay. Because that was going to be my question. Because a lot of people oh, it's 50-50. Well, maybe we talk about what I even mean by where do the kids live, because and this is an important question. The IRS actually bases a lot of how they will actually determine who gets what tax benefits on where the children physically live. Now, well, I guess let's back up even a track. So like in their divorce decree, I'm assuming they're divorced now, they have a divorce decree. What does the divorce decree say about like custody and kids and where the kids are?
So it's a 50-50 custody. She has one extra day. She says we are supposed to take turns claiming kids as long as he is current on his child support.
Okay, and that's a common type of arrangement, the way it could be. So there's not an even number of days, or like in most court documents, even if it's 50-50 custody, it's gonna allocate like that one extra day to the custodial parent, they'll call it. But here's where it's good to understand that like there is a difference between what the court says custody is and what the IRS says custody is as far as tax benefits go. And they're not necessarily the same thing. So you can have a divorce decree, for example, that says we are 50-50. Okay. Well, the IRS, as of a few years ago, says they don't care what the divorce decree says anymore, because divorce decrees can be wrong and old and not followed, and who knows what's happening. The IRS, as far as filing status and like who gets to claim kids, they say forget the divorce decree as far as the IRS is concerned. We want to know who the custodial parent is. And the IRS says that means where do the kids live more than half of the time. Forget divorce decree. IRS says where are the children? Because there was too much fighting. Like everybody's saying divorce decree, but what does it actually mean? So the IRS says, okay, where do the children live? And so then for Kaylee, if it says, well, 50-50, well, then the IRS says, okay, well, then nobody gets the tax benefit. Nobody gets to file head of household or get these extra benefits from the kids living with them, because the rule is that to file head of household and to get certain other tax benefits, the child has to live with you more than half the time. So if we're 50-50 or Kaylee, you're 50-50, guess what? That's not more than half the time. That means you don't get the benefit and dad doesn't get the benefit. Nobody gets the benefit. That's kind of like how the IRS solved the problem, right? Like, fine, if you're going to fight over this and say that everything's 50-50, well, then it's not. And neither, well, if it is, fine, nobody gets the benefit. So you'd rather be head of household than single, because the head of household filing status is better. It's got bigger tax brackets, which means that like your tax rate goes up slower. You can make more money that's taxed at lower rates on head of household. Head of household has a higher standard deduction, which means like you're allowed to write off bigger amounts filing head of household. This idea of the kids, if they physically live with you, is also tied to earned income credit, which is the credit you get for having kids live with you when your income's lower, regardless of who's claiming the kids. And so there's these benefits that are tied to where is the child physically living. Totally separate from what does the divorce decree say. Totally separate even from who is claiming the child. And so the filing status is one of those. And again, you need to know that you're doing this right, because this is where a lot of fraud happens. And the IRS is getting really particular on this. So to be head of household, you have to have at least one of the kids living with you for more than half the time. And then you have to be paying for at least half of the support of that household, which means you're paying the rent or you're paying the mortgage. So here's a situation where it wouldn't work. Like, let's say if Kaylee moved back in with her parents, okay? So Kaylee's now living back with her mom and her dad for free in the basement because she's just got divorced. She's been separated, right? She's not paying rent. She, in theory, then for, let's say she moved with mom and dad in March and has been living there since March as the divorce is, going through, right? She wouldn't qualify as head of household. Okay. Because even though the kids physically live with her more than half the time, she is not providing the support for the household. She's not paying for the household. So she doesn't get to qualify as head of household. So then again, this is like, you want to just make sure you're following the rule, because it kind of would make sense. Like, well, the kids live with me. Yeah, but that doesn't mean for sure you get head of household. And here's also what happens a lot is like, well, and really like there's two separate things. And I'll tell like with anybody that's going through divorce, like to think about with kids, right? When you have minor kids and you get divorced, there's two things that the IRS is going to look at. One's going to be who gets to claim the child. Now, claiming the child means that you get the child tax credit. credit.
Mhm.
Okay. So who claims the child? And that one, usually there are instructions in the divorce decree, like there were in Kaylee's, of who gets to claim the kid. Usually it's something like every other year or rotate these years. Like there's instructions on who gets to claim the child, right? That one isn't tied to necessarily like where the child lives. That one could be passed back and forth. Think of it like a football. Okay, it's dad's turn this year. It's my turn. It's dad's turn. It's my turn. We're passing back and forth who gets to claim the child. Now, side note, the custodial parent, according to the IRS, actually has the final say on all of that. If there's anything that's a conflict with the parents on who gets to claim who, but really that one can go back and forth, right? Okay, it's my year. It's not my year. Yeah, odd years are my years. Even years are his years. We're going to claim the children. And with that goes the child tax credit. Child tax credit goes back and forth with who gets to claim the kids. The filing status doesn't go back and forth. Filing status and earned income credit are not tied to who claims the child. They are tied to where the child physically lives. So if the child physically lives with me, and according to income and all the other rules, I qualify as head of household and I qualify for the earned income credit, great. I don't have to be claiming those children as dependents. It could be dad's year. And so ex-husband's claiming the kids as dependents, but they live with me more than half the time and I support the household. I meet the other rules. I'm still head of household. I still qualify for the earned income credit on those children. Dad picks up the child tax credit because they're his dependents. So who claims the kids, that can go back and forth. And it's almost like you're agreeing on what it's going to be, right? And the IRS really doesn't care as long as you guys are agreeing who's claiming the kid. They don't care. They do care about where the kid physically lives. This is one where you can't just agree to it. They can't just be like, okay, we'll just tell the IRS that this is what it's going to be. No, that's a big no. For head of household, for earned income credit, it's tied to where the kid really lives. And the IRS defines that on where are the overnights. So even if you are 50-50, but like, okay, dad's working swings, and so he drops them off at mom's house, and so mom ends up having them at her house overnight. Like, if the IRS is going to audit this, they're going to say, pull out the calendar and circle the overnights. And we're going to count how many times were kids at dad's house and how many times were kids at mom's house. And if they're split exactly, well, then nobody gets it. And if there's one day more at least, which there probably is, that parent is the one for potentially for head of household and for earned income credit if they qualify for those things. And the other parent does not count. So a lot of times like I'll see like parents will be like, oh no, it's just like in our divorce we just decided that like on odd years dad gets everything and on even years I get everything. So on odd years he's going to claim the kids and do head of household, and on even years I'm going to do that. No. That's a big no. You can do that with who's claiming the kid, back and forth, swapping it out, great. You cannot do that with where the kid is physically living. Unless the kid really did physically live with dad that year, then you're okay. But like, you can't just tell the IRS, this is dad's year for everything, this is my year for everything. Nope, it doesn't work like that. So you just need to be very careful. And I've had some conversations with some angry ex-spouses over this, because also your tax returns need to match, right? So like if you're saying with this kid lives with me, somewhere on dad's return, he also would have to indicate who's the custodial parent for all the credits to match and things. The IRS sees that on their back end eventually. And so when it doesn't match, they're going to reach out and say, well, wait a minute, the kid can't be with both of you for more than half the time. So you can't both get this benefit. Who is it really, right? And so this is where then parents start to get mad because money's attached to it. And dad's like, well, wait a minute, it's my year. I was supposed to get everything. Well, sorry, that's not the rule. You could have the child tax credit because you claimed the kid, but you don't now suddenly get to say you're the custodial parent for purposes of head of household or earned income credit if the kid wasn't actually living with you for more than half the time. So like some of it really is just based on reality, right? So I know another question that she had in here was like, I think she said with the divorce decree. So the divorce decree says that they're going to pass, or they're going to trade off who claims the child. Okay. And that they'll do that back and forth. Mom's year, dad's year, mom's year, dad's year, who gets to claim the kids. That's great. As long as dad is current on child support. Okay, so we get this, and not all divorce decrees say this, but we've seen lots that say this. So it's like, okay, so let's say that Kaylee, you come into me and you say, well, listen, the divorce decree says we go back and forth on claiming the kid if he's current, but he is not current. Dude hasn't paid child support in like 2 years. He's not current. I don't want to let him claim this kid. So So the IRS has a plan to resolve this too. If they say whoever the custodial parent is, and this is in reality, not according to the divorce decree. So again, where do the kids physically live? The IRS says wherever the kids physically live more than half the time, we're going to call that parent the custodial parent, even if the divorce decree doesn't. And that parent now has all power, basically. And that parent can say, I give permission to the non-custodial parent to claim the child tax credit this year, or I don't. And so, Kaylee, if if ex-husband hasn't paid any child support and you want to say, sorry, I am not going to allow you to claim the child tax credit because you're not following what you're supposed to follow. And so in the end, like if the IRS is going to fight about it because dad files a tax return saying, I get it. And then she files a tax return and says, no, I get it. And the IRS goes, well, who gets it? The IRS will side with mom. They will side with the custodial parent. And again, that doesn't mean by the divorce decree custodial parent. That means the custodial parent of where the kids for this past tax year were physically living. That's who they're going to side with. So you could also see this. Let's say that, let's say there's not something in the divorce decree about paying child support or not. The divorce decree just says you have to rotate. No matter what, you're rotating who claims the kids. You're supposed to rotate. Okay. And mom comes in and she's like, not doing it. Or like she doesn't say that. She's just like, oh no, it's just me. She doesn't tell her tax person, of course, that any of this conflict is going on. She just comes in, you know what I mean, and claims the kids. And let's say that it wasn't her year. It was really dad's year. And she's like, yep, big middle finger to you. You know what I mean? Like, this is what's happening. So if this were to happen, and this does happen, right? Well, the IRS lets her claim the kids, gives her the tax credits for the kids. And even though dad tries to file, says, well, no, it's in the divorce decree. It's my year. It's my year. Well, the IRS gets involved. Who are they going to side with? Mom, because mom's the custodial parent in real life, like where the kids are physically living. But that doesn't mean that mom can just do whatever she wants. What it means is, like, the IRS isn't going to fight that battle. The IRS is going to side with the custodial parent. But dad still has recourse. So if dad is like, says, well, wait a minute, it's my year. I'm supposed to. You didn't let me. The IRS won't undo it because you're the custodial parent, but it's my year. So what can dad do? Appealing to the IRS won't do anything. His recourse is through court. So then he could take mom to court and say, you are in violation of this divorce decree, and hold her in contempt. So it's like there's still a pathway for people to seek justice when the other spouse is acting naughty or mean, right? Yeah. But the IRS is like removing themselves and saying, we can't be the court. We are not going to fight and mitigate between these fighting parents. We're not going to do it. We will side always with the custodial parent where the kid physically lives. Now, if that means that it's going against the divorce decree, then dad, I recommend that you consider taking mom back to court and saying she's in contempt of court. She's violating the decree. And then the judge would say, you're in contempt. And then the judge can make mom change hers so that dad can now go back and claim the kid. So there's like a path for all of these things. And again, this is like, there's so many rules, right? But this is another reason of like, you might want to ask someone for help on your very specific situation. And because you may not know all of the options and all of these rules. And you might have an ex-spouse that might be trying to push you into doing something, like, oh, you should be doing this. Yeah. Well, wait a minute. Like, you want to make sure you're following the rules. And I just recommend for all of the people dealing with a divorce, like, and spouse, and still have the kids and taxes, and we want to make things work great. Like, we'd rather not give more money to the IRS than we have to. So if you guys can like work together and be on the same page, that's going to make it a better situation tax wise. Yeah. But that's not always possible. Okay, so if you can't, then fine. You just need to follow the rules, and follow the rules. Whatever the rules are, just follow them. Right. Like just follow the rules. And if the person gets mad, well, you were just following the rules. Like, it's not a bad plan to just follow the rules. But just know that there are different things, right? It matters where the kid physically lives. And the divorce decree also matters. I mean, it's not going to matter really to the IRS, but it would matter to the judge if you're taken to court by your spouse because you violated it. So does that make sense? About like the IRS is like backing out of it, saying we're just going to side with this person, then you drag the ex-spouse to court because we don't want to have to deal with it. But just know those things. So there's things to understand. So like when I'm talking to one spouse, I'll tell them like, I will tell you the exact same things to your ex-husband. Have him call me. Like, I have no sides. I'm not in this divorce. You know what I mean? Like, I'm trying to keep people like out of prison and like following the rules, and you know what I mean? Like, and so I will give the same guidance, you know what I mean, to both sides. Yes. Okay. So, but just know that there's, again, like, who gets to claim the kids or what's my filing status? Kind of a loaded question, because there's lots of options. And again, just because like a software might let you claim a kid, or the software might let you put down that you're head of household, doesn't mean that you should have done that. And sometimes there are certain things that the IRS catches almost immediately. They know it because of their back end data, like what you shouldn't qualify or not. And so they let you know immediately. The tax return's rejected, or you get a letter within 3 weeks. That's great because you didn't have time to spend the money before you had to give it back. But there are some things like this that the IRS doesn't catch up in their system with for a year or 2 years. And so even though like some software might let you like pass through, you like do a tax return and it gets accepted, doesn't mean it's right. Doesn't mean that in a year or 2 years you're not going to get a letter from the IRS that says, wait a minute, we now see that this was done wrong, and you have to pay us back with interest and penalties and all of the above. So just might be a reason to, like, if your situation's a little bit sticky, you just might want to get some help on that one.
For sure.
So Kaylee, good luck. And good luck to all of those dealing with these. We call them dynamics. So many dynamics. We say that in our own family too. Like, oh, so many dynamics. Oh, come to Sunday dinner. Oh, we got dynamics going on. Okay. Anyway, thank you, Ashley, for being here. And just a quick thank you. Oh, we'll move this. Thank you to joining us today. And again, if you have a question that you would like to ask a tax nerd, we'd love to answer it for you. So please feel free to shoot us over an email. The best email for this is question@askataxnerd.com, and we will get to it. Thanks, everybody.